Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 3rd of September, 2019. Welcome to September. Welcome to the end, the last month of the third quarter of the year. Very important month for trading. We'll see how things roll. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1587. Today, we're looking at a market that is coming off a little bit. It seems to me like the market is allocating to safety this morning with a gold pop at 1540 and 18 and 8 cents, 80 cents. Um, well, it's really bouncing around. It's up $11.80 this morning, or 0.77%. The dollar index is moving up as well, up 38 cents, trading at 99 dollars and 24 cents. The euro bund is up 17 cents. The bonds are trading December. The bonds and the notes are unchanged from settlement, and then the rest is all off. Crude being the laggard this morning. Crude is off 3%, trading at 53.47 from the last settlement, which was on Friday. The indices are all lower. We're trading in a gap down in the S&P. We're trading in an interesting area. We'll go over that in a minute. I hope you had a great, if you are in North America, I hope you had a great Labor Day break. It marks the end of summer. This is when the swimming pools and the buildings in Chicago get drained and shut down, and summer is officially over. In terms of what we're expecting for today, we had a couple of important releases this morning, but really out of the UK, construction PMI came in at 45 versus 45.9, but also the market's being driven by what's going on with the Brexit, no Brexit thing. Focuses on the UK political maneuvering within Parliament on Brexit, prospect of a UK election adds an extra level of complexity. I think it's Labour, that's Jeremy Corbyn, says that if they see that the current Prime Minister Boris Johnson keeps pushing for a no deal Brexit, then they'll push out a vote of no confidence or demand re-election or something like that. I'm not going to pretend I understand British politics, but it's shaky over there. Prospect of UK election adds an extra level of it. Lack of progress in the U.S.-China trade talks as both sides said they struggled to set a date after tariffs implemented. So this was interesting. So they're supposed to meet this month, but the struggle is right now is setting a date to meet. I am not sure how, if two governments cannot set a date to meet, I'm not sure how they're going to be able to pull off negotiating such complex things as intellectual property protection and tariffs. But China's Vice Premier Liu He says they reiterate the view that China firmly opposes trade war. Hopefully, that issue can be resolved through mutual respect. And that someone else said that the U.S. should butt out of the Hong Kong issue and not make that part of the trade war. But the market's sitting sideways. We'll look at what we've got here in a minute. In terms of what's being released, 15 minutes after the open, we get final market manufacturing PMI in the U.S. It's a low impact number, but we also get ISM manufacturing at 10 Eastern, 9 Central, half hour after the open. This is a high impact, expected to be a high impact release. Looking for 51.1, 51.1. We have a slew of numbers, construction spending, IBD tip, and so on, all at that 10 o'clock hour. We get GDP. There's Fed's Rosengren speaking at 4 Central, 5 Eastern. Not sure what that's going to do. And then Australia has their GDP growth release at 9:30 p.m. And then China's Caixin Services PMI comes out at 9:45 Eastern this evening. Let's take a look at what we expected on Friday versus what we got. On Friday, the primary expectation, we were gapping up. The primary expectation is for a push through the high, which was at 2946.50, a push through the high, and then responsive selling for a gap and sideways into the holiday weekend. The secondary scenario is what ended up working out. It's a push into the high and then selling into the prior range. The expectation there is it will likely push all the way down to 29.20.50, and it's expected to bounce at 29.24.50, which is what? Can't wait for your answer. It's the MC point of control, the area, or the most valued price, the most traded price in this region. And that brings us to a discussion about the MC, the micro composite, and how things are shaking out this morning. Here's what actually happened. So the expectation, the secondary expectation, is that we would push into 46, which was over here, to take out the overnight high. That did not happen at all. The market wasn't even able to take out the overnight point of control, which has a historic probability of about 85% of being tagged in the day session. And we only one ticked from the open. We open at 41.50, one tick to 41.75, and we sell off. And then it looked like it may be a driver, which meant get short, go for 24.50 from anywhere above 35. It looked like a driver, but it ended up kind of stabilizing and sitting sideways and then finally breaking into the prior range. This is the prior range high here, breaking into the prior range and then falling into the 24.50, which is the key target. And then the extended target was 29.14. 20 half and 29.14 were the key areas to test. Comes back to mid, right in there. The mid was about 27.50, went to 29, just a tiny bit of heat. And then we got this attempt at a continuation. It just went sideways. So we ended up with, in the morning, we had an upper distribution and a lower distribution, which was smaller actually. It was a lot more modest. By the afternoon, we had a very clear lower distribution that is in line with prior value, accepted value from the prior day. Notice that the point of control on Friday was 23.50. Before that, it was 24.50. The MC point of control is 24.50. This is a loved area, this 24.50. So we ended up with a point of control inside of the prior day. These 2 days make up balance combined together. Make up balance is what we see. We see a very clean and clear rejection of higher prices up in 29.41 and a pushback. This is the high of the MC of this entire area. I'll show you that on the composite in a minute. Very, very structured, very methodical trade or market currently. And we're going into something that is a lot more interesting in terms of how it's structured. Let me actually pull up my composite chart where it's a lot easier to see. It's loading, loading, loading. Tons of data loading. Okay, so here we go. Oops. Check this out. So here's the MC that started with this drop back at the beginning of August. And what we see here, in fact, let me just make that a little more easy to see. And let's go 80%. Oh, let's go 100%. So you could see the volume here that's occurred over this period of time. Let me reset these panes. So you can see the volume that's taking place. We have a gap right here between these 2 days, okay, and a wide, a wide open area right in there, and a low volume node on the MC on the composite point of control, and we have a dip in the MC point of control, and that's where we are today. And so what we're doing is we're moving from an upper distribution. We're looking to test from an upper distribution where we experienced some swift rejection on Friday to a lower distribution, and this shows it very clearly. If I shift this profile over to show you the most recent action, so as not to just include older stuff, you could see here that it's quite prominent there at 2450, and we are trading right into this low volume distribution area. Well, looks like news just now, something popping. Wow, that looks like news to me just now. So to me, it just what does this mean? It means we have to pay very particular attention to what's going on here because we're likely to see if it fails through this 2894 area or so, we are likely to start moving towards 2872 right in here. 2872, the high volume node. The 2872 is made up of these three balanced days before we had the gap up, and they had, looks like POTUS tweeting, where they had a balanced few days at 72, and that's the expected target. Okay, it's almost like a swing target, so to speak. The market just popped up and it came right off. I'll show you the volume scope here. Very, very light volume. Look at that. The volume scope, we had a pop up right there. Look at how thin the volume is there versus, say, this particular bar. And then we had a thinner, an even thinner drop, and then the market is completely discounted what the president just said. Just same stuff, same rhetoric. We're doing great. Everything's going to be worked out. Awesome. And then nothing really happens. So here's where we are. So just pay attention in this area because it's really important in what's coming up. Here's the last, looking at the last area of balance. This is where we popped higher from. You got to pay attention to what's going on down here. So as it pushes down below 2894 or so, which is the overnight low, as it pushes below there, then we're looking at 2872. See these 2 points of control right here? We love these prices. There's a profile that peaks out there. There's a profile that peaks out there. We love these prices, and we are likely to trickle down into this area if we break below. Very, very structural trade potentially, and that's what I'm looking at in this review. Let's take a look at the overnight session so we can move on, go about our business. Let's close this. Where's my overnight? Here's the overnight. The overnight session has really not done much. I've deleted the action that took place Sunday afternoon, Sunday evening, Chicago time through yesterday. It's holiday volume. I got rid of it. And what do we end up with for today? A perfectly Gaussian, just out of the statistics textbook type of profile. The overnight session is completely balanced, completely sideways on really good volume. So what we have here, and it had moved up and tested the prior high, which was prior low 29.13. It went to 15.50. And so what we have here in the overnight session is a lot of volume going off, and it's basically it's like a rocket that's been primed. There's a lot of compression here. There's really a clear balance with the point of control, VWAP, and the mid on top of each other. There's likely to be a break here today. I'm expecting it in this session. So I believe that this session is setting us up for potential for a push. Let's take a quick look at liquidity and the overnight session and what it has done. This is ctbookmap.pro. So if we look at the overall events of the session, lots of noise here through the European Open and through the thick of the European session. There's just a lot of whipping around. You can see that point of control shifting a lot throughout that session. Volume came in. You can see the volume start to ramp up right here. Volume comes in and it's just popping everywhere, and you can see there's just little artifacts of liquidity everywhere. It's just very, very bizarre looking overnight session. And so this, as we approach the open and we start to look at what's really offered out there, the 29.17 above, the 29.20 are key areas in terms of liquidity. And then recently, this 29.12, this 29.12, 29.50, and then below, you have the 2900 area, which I would recommend you don't trade. Try not to trade around century figures. These are major, major strikes, and they're likely to be defended in both directions, or there's likely to be activity in both directions. Beneath there, 28.95, that overnight low, and then beneath there is 28.90 in terms of liquidity. Because I have full depth here, I can show you what's beyond there. So you can see it pushing into that 76. Here's that big, big target that I said. If we get below 28.94, if we start pushing below here, this becomes a big target. I have a stock zone there, 28.72 to about 75 is a key test area below. If we fall back below 28.94, I'm going to be looking to aggressively sell that and hold on for a ride down into 28.80 and 28.72. Okay, let's take a look at what we're expecting for today. Let everybody go on about their business here. What are we expecting for today? This morning we have a gap below. Okay, we're gapping below where the S&P was on Friday. Remember, this is still a gap zone right here. Right here, this is still a gap zone, and this is a completely unauctioned area since the break. Okay, and we are in the middle of it. So it's going to be very tough to read what the market is going to likely want. My expectation based on auction markets and how the market's expected to operate, I'm expecting an open-in gap, an attempt lower, and a responsive buying. I'm looking for it to push back into 29.14 and then push into that liquidity into 29.17 and climb into 29.20 and potentially drop by the close, drop back out. But I'm looking for responsive buying into the open today. So I'm going to be looking for clues of this as we come into the session. In terms of the secondary scenario is more initiative instead of responsive, looking for a response up that leaves a gap up, an impulse down, pushes through this 28.94 and starts making its way down into 28.88, and then if we're lucky, it starts to draft down into 28.72, but chances are might bounce up and finish in the upper portion of the Monday through Wednesday balance of last week. That's the secondary scenario, is open, test up, and then start to push down or drive down. I don't know which, but this is the kind of day where we're opening in a gap with the overnight session having had a lot of volume in balance. So what we have is consolidation compression in the overnight session, and we are likely to get a really strong move from this area. And my job this morning, just so you know, my job this morning is to sit here and wait to see which side is able to make headway, and then to trade from that side. So I'm going to be watching very carefully for the quality of a move down versus the quality of a move up. How do I measure quality? I look at what it's doing in terms of the volume that's going off versus the price that is gained. Okay, so it's kind of like testing the quality of an engine by putting it on a steep slope, revving it up, putting it into gear and seeing how much territory it gains for the amount of RPMs or the amount of horsepower you're putting into it. Kind of like that. If it appears to be lifting and lifting and lifting and lifting and lifting and not really getting good traction in terms of price movement upwards, and it's often more easily seen in a volume scope chart. You can see it lift, 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 and it's just not getting any traction. To me, that's a sell opportunity, uh, especially if it's away from value. It's a sell opportunity for a push down, and then the opposite for up. Okay, I'm willing to play because it's in a gap zone, not to confuse everybody, but because it's in a gap zone, I'm willing to play the move up or I'm willing to play the move down. I am not willing to play the in between. Okay? Not willing to play in the middle here. So it's either going to attempt to push higher and sell off, attempt to test lower, continue the overnight session, and then become responsive buying. The stronger move is going to be the initiative, is likely to be the initiative. The test up and push down is likely to be the stronger move, the move that gets more people involved and gets more distance. But I still have to wait and see. Why? Because we are in no man's land here in this gap. Okay, this is the low volume node, and I've covered a lot of this morning for this long trader bite. So anyway, I hope I'm leaving you well informed and a little bit closer to seeing what you can take advantage of once the market opens. Good luck.